the course of 25.
You think? Even though he made clear that every meeting is a new, they reset the table completely, and every meeting they determine what they're going to do at that meeting. There's no set course for any of this.
I would argue this is an incredibly transparent Fed. I mean, some have even argued that, you know, we're hearing enough from Fed officials at this point. I think they put 50 out. I think they put 50 out there to say, it's a possibility because everything is on the table depending on the data. And I think it's just so that it doesn't necessarily rattle the markets.
Well,
it's Ken Griffin who said, say less.
All right, yeah,
right?
Great orator there, a former Chicagoan. We should point out, Carol Massar, quiet period starts on Saturday for the Fed, so your wish has been granted. Although there is one more Fed speaker tomorrow. So.
A little ohm for everybody, a little Fed ohm. All right, we're going to come back in less than an hour's time. We're going to count you down at the close. On this Wednesday, we will all be back. Radio, TV, YouTube, and Bloomberg Originals Beyond the Bell, 4 p.m. Wall Street time. Join us.
Love is fine for all we know. For all we know, our love will grow. That's what the man said. So won't you listen to what the man said?
All right, as you know, we just talked with our TV colleagues, Mike and myself. Day 2 of Fed Chair Jay Powell up on Capitol Hill. What we got today, par for the course. Powell stressing that policymakers had not made up their minds on the size of their interest rate increase later this month and said it would hinge on incoming data on jobs and inflation. Mike, it sounds like data dependent to me.
It really does. And what's fascinating is that's as honest as they can be about the situation, right? And they repeat it over and over again.
Transparency with a capital T.
Yeah, but the market just wants that sort of certainty of where they are going to stop raising rates, and they just can't tell you right now. And I think, you know, if the story of the market over the last year is not up, down, it's sideways. You know, you look at the S&P's average over the last year, it's basically where we are now. So all this volatility, all these up, downs, days and downs, the market really hasn't gone anywhere.
All right, let's see what our former Bloomberg colleague, Yelena Shaletyeva, senior U.S. economist at BNP Paribas, has to say about all of this. She joins us via Zoom in New York City. Yelena, so good to have you here with Mike and myself. All right, so we got Jay Powell, day 2. You got the beige book. You got another strong bunch of data points when it comes to the labor market. What was front and center for you today?
I think you highlighted it, Carol, and it's so nice to be back with you guys. So you highlighted it very clearly. You know, the Fed is data dependent, but, you know, Powell saw the market reaction to his testimony yesterday, and he decided to repeat the same exact hawkish message today. And, you know, he qualified it a little bit that, well, yeah, it's data dependent. He wanted to stress that point. That was the only kind of caveat in today's remarks. But still, the tone of the speech today was the same hawkish type of comments that he delivered yesterday. And I think it would be very difficult for the Fed to walk back away from that hawkish message. It would take a really weak economic data for them to under-deliver on what he seemed to have hinted in his prepared remarks.
You know, and Yelena, obviously, we're all biting our nails waiting for that main event of economic data on Friday, the jobs report. ADP's jobs report today, 242,000 private sector jobs. That JOLTS job openings was a little bit higher than expected, 10.8 million openings. Are you bracing for another hot jobs number?
So that totality in Powell's words of employment data is telling us that the labor market remains extremely tight. And there's no question about it, whether you look at like some movements, some near-term movements in job openings or claims or anything else, ADP. So all of it is telling us the same exact story. The labor market remains tight. And that is ahead of the payrolls report on Friday. So we are expecting another solid reading. We're slightly above consensus here at 240. So we think we will see some reversal of weather-related distortions that were very prominent in the January report. We estimate something like 30% of the number was driven by weather-related distortions. But still, you know, February was still warm. I was like not wearing my warm clothes.
It's crazy, right? The birds are singing, the plants are coming up.
Right.
Yelena,
really
Elena,
warm.
can I ask you something? Is totality now the new transitory that we're going to parse over exactly what this new T word means?
Another T word, right, Carol?
Yeah.
So it does seem like that. They keep repeating that sentence, but that's what it is. So they look at a whole bunch of different indicators, including wage growth. So that's another key story in the upcoming payrolls report on Friday. We are looking for some reacceleration of wage growth in the payrolls report in February. So if that comes to fruition, we may, that is going to be a very interesting story for the Fed, because Chair Powell specifically mentioned wages and wage growth in his testimony. It was right in the first few paragraphs that wage growth is great for workers, but when you look at it in terms of inflation and nominal wages, that could be a different story. So we don't want significant reacceleration in nominal wages. And this is something that we may see on Friday. So that's gonna, that if it is true, that would be another piece of a puzzle to persuade the Fed that they need to potentially go faster and stay in the restrictive territory for longer.
You know, Yelena, I think one of the big sort of underappreciated issues for the market this year is everyone talks about, well, how high will the Fed increase interest rates? But the markets previously were pricing in sort of a short-term peak, and that the Fed would probably be cutting rates this year. Now it seems like everyone's rethinking that, and that, yeah, we might hit that peak rate, whether it's 5.5%, 6% for Fed funds interest rate, but it's going to stay there longer than what the market had anticipated before. Where do you stand on that? How long will we sit at that peak rate, do you think?
Our newly released projections, we just released a new global outlook just recently. So we don't see any cuts until next year. So it's really was the message from the Fed that they're very serious about staying there for longer. It's just that the market is adjusting to that, as you mentioned. So I think it would really depend on the pace of inflation deceleration. So it's really easy to get to something like 3 to 4% in terms of inflation growth, but the trajectory of disinflation from there and to the 2% inflation target is going to be very difficult to achieve, and it might take some time. And that's why the Fed is clearly telling us we're going to stay there until the job is done. We're going to stay at it and keep at it and do whatever it takes to conquer inflation, which may need to, for that, we may need to see rates higher for longer.
So, all right. So if that could possibly happen, and then, Yelena, looking at what's going on between the 2s and 10s right now, right, above the spread, more than 100 basis points, does that mean, yes, definitely recession? Does that also potentially mean recession deeper and longer?
Well, recession has been front and center of our outlook. We are sticking with our call, unfortunately, for a recession, and that we think is a necessary condition for inflation to come back at where it needs to be. So the path to so-called soft landing is so narrow that it would be a miracle if that realizes. We all want that, but the reality is it may take us through a downturn in order to achieve that.
But what kind of a downturn? That's what I'm curious about. Is it deeper?
Right.
Is
So,
it wider?
yeah.
Potentially.
Yeah, something akin to the 90s recession, probably not severe.
I remember that recession.
Yeah, well,
I was out of work after that.
I remember the financial crisis recession, probably not as severe as that, but still, severe enough for a lot of Americans to feel the pain. but unfortunately, may be a necessary condition for us to go back into balance.
I wonder if that means grunge music will come back, Carol, if we're ready for that. But
Anything's possible.
Elena, obviously the other big number on tap next week, CPI. I'm looking at the consensus estimate here for it to come down from 6.4% to 6%, core to come down from 5.6 to 5.4. Where do you stand on that? What's your marker for next week's CPI report?
So we think, payrolls would be more crucial in terms of defining what the Fed does next. So CPI will probably decelerate. We will be looking at where services inflation is going. If that super core services inflation is sticking where it is, and we call it sticky inflation, for that to go down, we need to see wages to decelerate. If that is still significant, that will reinforce the Fed's message.
Right.
What really struck us in the previous CPI report is the breadth of inflation gains. It was everywhere in the goods, in the services, categories.
Right.
So I would personally be looking at the breadth of inflation gains.
Yelena, really fast, 25 seconds. Okay, hot labor market. What if we get a strong jobs report but weak CPI data? Can the Fed be softer in their March move? Just quickly.
What we
10 seconds.
We need to see is significant deceleration in wage pressures. That's what we should be looking at. That's what is important.
Okay, good to know. Always great to see you. We love you. Yelena Shaletyeva, as we said, a former Bloomberg colleague, senior U.S. economist at BNP Paribas, joining us via Zoom in New York City. All right, folks, we're watching the trade here. Equities bouncing around. We're just a little bit lower across the board on those major equity averages. Carol Master, Mike Regan, you're listening and watching Bloomberg Business Week on Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:21 on Wall Street. Fed hike anxiety is brewing. Stocks are lower across the board. The Dow, the S&P, NASDAQ, all declining today. Wall Street not getting much relief from Jay Powell's testimony to lawmakers. Victoria Fernandez is chief market strategist at Crossmark Global Investment. She says the determinant of the next Fed rate hike move, 25 or 50, all comes down to the data.
Now we're seeing the market catch up. And I think the Fed is saying, look, we've been telling you this all along. Are you finally going to jump on the train with us and move along? And I think we are. Now, we need expectations to get to around 90% in the futures market for the 50 basis point usually to happen. We're not there yet, but we could be. But we've got plenty of data over the next 2 weeks before we get to that meeting.
And right now we've got the 2-year yield, highest since 2005, 5.06%. The 10-year's yielding 3.97%. Equities are lower across the board right now. We have got the S&P down 11, drop there of 0.3%. We do check markets all day long here at Bloomberg. The Dow down 179, drop there of 0.5%. NASDAQ down 10, a drop there of 0.1%. Spot gold up $1 the ounce to 18.14. West Texas Intermediate crude down 1.5%, 76.43 a barrel. Briefly, Caterpillar sees strong demand for construction equipment as a sign that the U.S. will avert a recession this year. Caterpillar shares today, they're up 0.3%. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
Gotta love when Caterpillar talks. They have such a great view on the global economy. They've got a lot of forecasters on staff to help them do that. All right, Charlie, thank you so much. Carol Masser, Mike Regan here on Bloomberg Business Week on this Wednesday. And Mike, we have actually been talking with a lot of well-known folks in the restaurant space. Eric Repair, Danielle Ballou, John Tapper of Bar Rescue. One common denominator that they seem to all talk about and stress is the tight labor market and just having a hard time finding enough workers.
Yeah, absolutely. I mean, a lot of competition for jobs out there. Let's be honest, restaurants.
But it's restaurants.
Yeah, but they're not exactly known for their high wages and great benefits and stress-free atmosphere.
That is several good points. All right, so in keeping with that, and we did get a lot of labor points, if you will, economic statistics today. This next story definitely jumps out at us. It's about how restaurants have come roaring back post-pandemic with everything they need but staff. So let's get to it with Bloomberg News consumer reporter Leslie Patton. She joins us. She's on the phone from Chicago. Leslie, good to have you here with Mike and myself. So we do hear this a lot. Tell us what you found out in reporting your story.
You know, it's interesting. We're seeing that demand is up. Everyone knows about there's this pent-up demand for dining happening. Chains are expanding quickly, looking to open new locations. But kind of the problem is staff. A lot of these people, and you know what's different than in the past is that a lot of these food service employees have left the industry for good and did that over the course of the pandemic for a bunch of different reasons, really.
Leslie, I'm wondering, is it having an impact on their businesses? You know, are they missing out on sales because of this? Are they having to close locations, anything like that?
Yes, that's been happening during the pandemic, but 3 years later, it's still happening. And a lot of these big chains, they don't like to explicitly say, we're missing sales, but you can read between the lines. A lot of the big chains are still operating on reduced hours, so they're not open as long as they used to be during the pandemic. So maybe they aren't running that night shift. Maybe the dining room's closed during certain times of the day. Domino's has said they still can't find enough delivery drivers, so it's taking longer to get each pizza to people's doors. So yes, all of that affects sales.
I mean, how bad is it? Is it mom and pop? It sounds like you're telling us about some well-known names. So how bad is it across the industry?
It's harder for mom and pops, I think, overall for the independents to find and keep workers in a lot of cases, but we're hearing it from big chains too. I mean, Jack in the Box is still doing reduced hours. They're not open as much as they used to be. And all of this is happening, one important thing to keep in mind, despite pretty big gains for wages.
You know, it's funny, I'm thinking back, Leslie, to my own days working at Denny's as a teenager. And one thing I always looked forward to was that free meal you got on your shift. is a nice perk at a restaurant. But I'm wondering, are there perks like that? I mean, obviously, probably a free meal is not enough to bring anyone back. But are these companies doing anything? Is there anything they can do or that they're trying to do to attract workers?
Yeah, I mean, I think pay benefits, those are the big ones, and they all are offering higher pay than they used to, and in a lot of cases, more benefits. One interesting thing I found talking to a Burger King and Qdoba franchisee, he's in West Virginia and Ohio, he said that he started doing an extra $2 an hour attendance bonus just to get people to show up for their shifts because he was having so many call-outs and no-shows. It definitely has helped. So, I mean, when it comes down to it, it's the money, right?
Well, can you remind us, in Mike's day, he'd go work for a restaurant, right, or a franchise. I have a sister who worked at McDonald's, growing up. These were jobs teenagers, definitely sought out. What's the typical labor pool for restaurants that they typically pull from?
It is still somewhat of an entry-level job, but I think you're right. That idea as restaurants as your first job, as you go to the local McDonald's down the street and you get a job when you're 16, I think that idea has kind of dissipated in a lot of ways, right? So we're not seeing as many younger teenage workers. Maybe they have internships or they're doing more after school activities, that sort of thing. It's really the kind of millennial Gen X generation that's working in restaurants these days.
Can I just to follow though? What about immigrants? That typically that's often an entry job for folks who come into this country. Is that part of the problem?
Yeah, I think that's part of it. We saw fewer immigrants over the past, 4 5 years or something. Mm-hmm. I mean, the meat industry has called that out too, because the meat industry, the packing and slaughtering houses, they employ so many immigrants, and they're really struggling for staff, and were during the pandemic and during kind of the Trump presidency, and that's because of stricter border controls.
Leslie, sometimes I feel like a broken record because I feel like every economic markets discussion always reverts back to the topic of inflation. And I'm wondering, this all sounds to me like we should expect higher prices from restaurants going forward. Has there been a lot of price increases? I mean, I know there's been some, but what is sort of the vibe there as far as the outlook for higher prices at restaurants?
Great question. So that there have been a lot of price increases for restaurants over the past year or so, but at the same time, I think we can probably expect more because wages are continuing to be pressured. There's still a shortage of staff, which means wages need to go up further, which means menu prices are going up further. This really doesn't give too much hope for the Fed's emphasis on kind of stemming inflation in that service sector. I mean, maybe the rate is coming down a little bit, but it certainly isn't over.
Yeah, it does feed into that wage inflation and makes it stickier. What do folks in the restaurant industry typically make? And what kind of, increases have they been getting?
I think on average, a fast food cook is maybe around $12 or $13. But a lot of states have this kind of, $15 minimum wage. A lot of municipalities have moved to that. So it really varies across the country. I mean, still we're at this federal minimum wage of around $7. So there's huge discrepancies across the country in terms of what people are making. I'm in Chicago. I've seen restaurants put signs up saying they're hiring people starting at $20 an hour. But that's certainly not the case in some more rural areas.
Well, $20 an hour, that's where I'm sending my kids, Carol, to those places.
It's not too shabby.
Leslie, I remember a few years ago, prior to the pandemic, some restaurants started trying to automate as much as the process as possible. Ordering with touch screens, that sort of thing. There's even talk about, well, maybe, the cooking and preparation of the food could be automated. Where do you see that going? Is there obviously there's a greater motivation to automate as much as possible now, but are we seeing that play out at all in real life?
It's happening, but it's slow going is the important thing to remember. And another thing, I mean, we're not going to have robots necessarily cooking all of our food in the next few years. I mean, these are still largely very much people labor jobs. I mean, we see kiosks in restaurants and fast food places sometimes, but when you think about it, when you go in, do you go to the kiosk or do you go to the register if there's someone standing there? I think 9 times out of 10, people go to the person. They don't go to the kiosk. So there's movement there, but it's slow and it's, incremental at this point.
I got to say, to Panera, I have no problem with using my app and then just running by and picking up, or going in and using their kiosk and then you just pick it up. So I do wonder if at some point, Leslie, these these restaurant chains are going to have to do more automation, especially if this trend doesn't change. I mean, it's not easy. It's long hours, sometimes not great hours, and not great conditions, many would argue. And just got about 20 seconds here.
Yeah, sure. I mean, with the apps, I think, yes, that's a way to kind of like for restaurants to skip over these kiosks. And the pandemic has taught us to be more okay with ordering, Grubhub, that sort of thing on an app. So yeah, I think that's right, Carol.
Right, you go to an airport, right? You just see it's a iPad.
Yeah.
And then all of a sudden somebody brings you food.
I'm waiting for the Chat GPT element, Carol. Can you have?
What should I eat?
Yeah, give me a new recipe for something.
Cook it up before you get on the plane. Leslie Patton, great story and really relevant. Leslie Patton, she's consumer reporter at Bloomberg News, joining us on the phone from Chicago. All right, let's get a check on the latest world and national news. Off to D.C. we go. Our 99.1 newsroom and Nancy Lyons. Hey, Nance.
Hey, Carol. Emotional testimony today before the House Foreign Affairs Committee that's looking into the chaotic withdrawal of U.S. troops from Afghanistan. As Bloomberg's Irv Chapman reports, testimony came from veterans who were there and from those who were still working to get Afghan allies out of the country.
The Republican majority put the onus on the Biden administration. Democrats spread the blame to include Donald Trump and George W. Bush. Retired Colonel David Scott Mann said the withdrawal didn't have to be total.
We fought and we bled for 20 years to build an Afghan Special Operations Forces. The Afghan Special Ops did 95% of the fighting and fought to the very end. I believe that could have been a responsible antibody to violent extremist groups with a small footprint that advise and assist.
The veterans spoke of the moral imperative to protect vulnerable Afghans, with the U.S. government not doing enough then and now. In Washington, Irv Chapman, Bloomberg Radio.
The Justice Department says there is reasonable cause to believe Louisville police have a pattern of violating civil rights. Attorney General Merrick Garland today outlined the findings of a probe by the department that was prompted by the police shooting death of Breonna Taylor in her own apartment.
The report finds that LMPD uses excessive force, including unjustified neck restraints and the unreasonable use of police dogs and tasers, conducts searches based on invalid warrants, unlawfully executes warrants without knocking and announcing, unlawfully stops, searches, detains, and arrests people.
Garland says Louisville officials have agreed to work with federal officials to address the problems. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Hits, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 3:41 on Wall Street. I'm Charlie Pellet. A turnaround for NASDAQ in the green right now. The Dow, the S&P, they are both lower. And yes, we check the markets all day long here at Bloomberg. This update brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. The sacrifices you made keeping your employees on payroll during the pandemic are not forgotten. Check the potential refund your small to medium-sized business may be eligible to receive through the Employee Retention Credit with no upfront costs. Learn more at getrefunds.com. Now, let's get right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. U.S. stocks trading mixed on day two of the Fed's Powell's presentation. Dow futures, or Dow, is currently down 100 points. S&P's dropped 2, and NASDAQ is now higher by 25. The U.S. 10-year yield at 3.97%. Gold is up 2, oil trading in the red, and Bitcoin is little changed. Among the main 11 S&P sectors, leaders were real estate and utilities. Energy and the financials were under pressure. And leaders to the upside in the Dow, Home Depot and Intel, while Merck fell 2.7% and led to the downside. In the crypto space, JP Morgan is ending the banking relationship with Gemini. And in other news, J&J spinoff is selling $7.8 billion in bonds to fund the separation. Wrapping things up, MongoDB reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie.
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg type squawk, SQUA, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car. I turn on the radio.
How about you let me drive?
Oh, no.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's
the question that drives us.
This is the Drive to the Close.
That funky music will drive us till the dawn.
On Bloomberg Radio.
All right, everybody, just about 17 and a half minutes left in today's trading session. Check this out, Mike. We're seeing some buying here in the last 18 minutes of trading on the equity side. Mind you, we're still well off our best levels of the session, but, we're up about 0.25% on the NASDAQ.
Yeah, S&P about flat, 39.85. Someone's buying the dip, I guess.
Yeah, it's kind of interesting to see, but a few more minutes left in the trade on day two of Jay Powell testimony, some strong labor reports as well. So let's get to it. Let's get to our drive to the close guest. Sonia Meskin is head of U.S. Macro at BNY Mellon Investment Management, former senior financial expert at the IMF, also spent some 6 years at the New York Fed working on analytics. Perfect guest to have us on this Fed Wednesday and also on International Women's Day. She joins us via Zoom in New York City. Sonia, so good to have you here with us. We are living in interesting times, stuff coming at us. How do you make sense of the macro conditions of this market environment?
Yeah, it's indeed very, very interesting times. I think we'd anticipated markets to be volatile this year. That is exactly what has transpired so far. I think there's certainly tension in the macro data between the Fed tightening, but also the underlying strength of the U.S. economy, especially the U.S. consumer, as inflation remains elevated, of course, but also does continue to decline. We think real incomes will actually be fairly solid this year, barring massive layoffs and a recession. So certainly very, very interesting times. I think the outlook for risk assets remains quite uncertain.
All right, wait, hang on a second, because you said you expected volatility. We're getting it. I've got a VIX that's below 20. What's up with that?
I do think that there is certainly some optimism regarding the equity market. I think that investors are now pricing in, to some extent, a more hawkish Fed. But on the other hand, the U.S. economic resilience indicates that we might be able to withstand that.
Sonia, it seems like almost every day we see news about more big layoffs from the tech industry or even Wall Street. Yet I look at these job numbers that keep coming in. Today, the ADP employment number, 242,000 jobs added in February, way higher than expected. That jolts job openings at 10.8 million. What explains this sort of disconnect between the anecdotal headlines about layoffs and how this labor market just continues to be so red hot, according to the official numbers?
Of course, I think there is some sectoral rotation going on in the U.S. economy as well. We saw the tech companies do very, very well during the pandemic because mobility was low, but people still had money to spend. Certainly, those sectors hired quite, strongly. There was definitely a run-up in crypto as well, for example. Those trends tend to, not last permanently, and they're currently unwinding. But those are very specific sectors, and we really haven't seen the layoffs spread to the rest of the economy. And what we're hearing instead from most sectors is that workers remain hard to source, and that even if we do enter a recession, that labor hoarding is a real risk.
So are you expecting another very strong jobs report on Friday? And, is that just another good news is bad news type of situation for equity markets?
I think that, there was definitely some seasonality that boosted the numbers in January, but I do think the labor market is, in fact, quite strong. So I think we will see maybe not as high of a headline number on Friday, but we'll see a strong number.
It's interesting too, and folks much smarter than me, and I am thinking about our Neil Dutta of Renaissance Macro, sending out a note, and he's like, remarkable that home building stocks are holding up. You had mortgage rates increasing for a fourth week, the highest level since mid-November, mortgage bankers putting that out, and yet I'm looking at the group of home builder stocks up 1.6%. So we know the Fed's going to continue raising rates. We're talking about maybe the possibility, good chance that we're going to have a recession. So again, how am I supposed to, as an investor, read that signal, Sonia?
Well, I think the housing market is a very interesting market. There is certainly, in the pass-through of monetary policy to the real economy, the real estate sector, specifically residential real estate, is one of those key sectors that gets, feels the monetary policy tightening. But that is a cyclical issue, and it always falls against the structural background of what's going on in that sector. And what we're facing today is almost the opposite of what we were facing in 2008. 2007, 2008, when, rates, obviously the Fed had been in a tightening cycle, but we really had excess capacity in the sector. We had the froth that this time around we had in crypto, but then we had it in the housing sector in the US, which was obviously for the rest of the economy much more pervasive. So this time around, we're having a structural shortage. We hadn't been building nearly as much as what, demand would be consistent with.
So it's just supply demand, once again, out of balance in home building. And it's
exactly. And, what actually ends up happening is that when those mortgage rates get high, we still, sellers might not be as interested in selling at somewhat lower prices. But if you look at the run-up in prices we've had since COVID, we've barely put a dent in that.
Sonia, everyone I talk to seems to say the same thing, and that is when the Fed hikes rates aggressively, they tend to break something. And I'm wondering, it doesn't seem like anything's broken yet. Maybe, market returns last year, but from the pure economic, inputs, is anything breaking, or what would you look to sort of break first?
I just got about 30 seconds.
Of course. Well, I think that crypto is one area, and we're certainly seeing some things breaking there. I would look at the private credit area. I do think things are fairly solid there overall. I think firms generally have turned out funding. But, the longer we stay in a high rate environment and the sooner we get towards a point where firms have to roll over debt, the more you're probably going to see some difficulty rolling over into the high rate environment.
Well, it makes your job and our job really interesting. interesting, all of this stuff that's going on. Sonia, thank you so much. So appreciate it. Sonia Meskin, she's head of U.S. Macro at BNY Mellon Investment Management, joining us via Zoom in New York City. As we mentioned, stocks are trying to make their way up to their best levels of the session. So what does it mean? Just up about 5 points on the S&P 500. Dow still down about 51. NASDAQ up almost 50 points for a gain of 0.4%. You're listening and watching Bloomberg Radio.
Your company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pella. 3:53 right now on Wall Street. We begin with a headline from the Bloomberg Professional Service. WWE is in talks with regulators to legalize betting on matches. And according to a CNBC report, we do have shares of WWE up now by about 0.75%. Southwest Airlines is going to be using Amazon servers to help process fare searches, cruise scheduling, and other software tasks, a modernization of its technology that comes months after a meltdown stranded thousands of the airline's passengers. Shares of Southwest, say, are up now by about 1.4%. Amazon also pushing higher, up by about 0.2%. JetBlue announcing an expansion of its transatlantic service with daily nonstop round-trip flights from New York and Paris beginning June 29th. As we hear from Bloomberg's Steve Rappaport, it's offering lower fares than its rivals.
Charlie, main cabin fares start at $479, a price tag that's roughly 60% lower than similar overnight departures on Delta Airlines and American Airlines. According to data compiled by Google, Delta charges $1,222 for basic economy, while American offers the same route for $1,152. The announcement marks as the company's second transatlantic direct flight from New York after it launched service to London in 2021. It also comes as the Department of Justice challenges JetBlue's $3.8 billion deal with Spirit Airlines with an antitrust lawsuit. Charlie?
And that's Steve Rappaport. JetBlue shares down now by 1.2%. Those are the company stories we're following, and this is Bloomberg.
You're listening to Bloomberg Business Week with Carol Messer and Tim Stenovec on Bloomberg Radio.
All right, everybody, this is Bloomberg Business Week. It is Wednesday. It is March 8th. Carol Masser. As you know, Tim is on leave, and with us is Bloomberg's Mike Regan here on Bloomberg Business Week in our Bloomberg Interactive Broker studio. Hey, our most read story, Mike, on the Bloomberg in the past 8 hours has to do with a big, well-known hedge fund. We're talking about Millennium Management. They've changed its terms to ensure that clients always pay a minimum fee, even if the hedge fund loses money. That's a good business to be in.
Yeah, right. You lose money, you still get paid. So they will now pay annual fees of about 1% of assets or 20% of investment gains, whichever is greater. Though I got to say, Carol, this is kind of a reversion back to the way it used to be in the hedge fund industry, right? That 2 and 20. You know, you got that 2%.
So it's this 1 in 20?
1 in 20. So, and especially for this fund, since 1990, it's only had 2 down years. So actually, it's only returned less than 5% in 2 years. Correction. So pretty good track record. So what, you can't blame them for trying to get that fee.
Yeah, you got to know what your worth is, I guess. Also among the most read stories on the Bloomberg, we're going to talk a lot about AI a little bit later on. We have a venture capitalist. I want to see what she has to say about that. And then a story in Bloomberg Business Week, the new issue that's coming out tomorrow, is all about what Google is doing when it comes to AI, because it's playing a little bit of catch up. But in the meantime, Ken Griffin sitting down with Bloomberg Business Week yesterday in Palm Beach, Florida, talking with our Miami bureau chief, Felipe Marquez. And he said his firms are in the process of negotiating an enterprise-wide license to use OpenAI's ChatGPT tool. So he sounds like he's all in.
Yeah, he says they could potentially use it for everything from helping developers write better software code to translating software between languages, analyzing various types of information the way their analysts do it in the ordinary course of business.
In your work covering the markets, are you finding a lot of people talking about ChatGPT and AI?
Absolutely. Yeah, absolutely. I mean, I think that it just shocked everyone how good that thing is at, writing, whether it be a poem, a joke, or...
Yeah, but don't push it. Don't push it, because then you get some crazy stuff.
Yeah, right.
Although I think Microsoft has made some moves to limit that.
Yeah.
All right, guys, we just have about 2.5 minutes left in today's trading session. Stocks just off their best levels of the session. Let's head over to our TV colleagues. That's because Beyond the Bell, it starts right now.
Beyond the Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic and Scarlett Fu, we're counting it down to the closing bell, here to help take us beyond the bell. It's a global simulcast. We're rejoined right now by Carol Masser, Mike the Value Trader Regan, and we welcome our audiences across Bloomberg Television, Radio, Bloomberg Originals, and those folks streaming on YouTube. Carol Masser, I think the last time we talked, pretty much all the major indices were in the red.
Yeah.
Quite a few of them punching into the green here, with the NASDAQ now up 0.5%.
What's up with this? I mean, maybe investors just getting comfortable with the kind of options on the table. Fed's been very transparent, but I think it's kind of remarkable to see this bounce back. And take a look at something like home builders. They're up about 1.6%, even though we saw mortgage rates up for a 4th straight week. I know this has some supply-demand metrics at play, Mike, but nonetheless, this group continues to rally.
Yeah, Carol, something interesting I noticed today is everyone looks at that S&P 500 chart, right? And you look at where we are now, the high, the low. No one looks at the average level of the S&P 500.
But Mike Regan does.
I do. It's there for a reason. And if you go back 3 months, 6 months, 7 months, 8 months, 10 months, That average is basically where we are right now. This market keeps reverting to somewhere between 3,900, 4,000 on the S&P 500, Scarlett. So it's really fascinating that all this volatility, these wild swings we've seen, we're really kind of settling back into this average level we've seen over the past 10 or so months.
You know, I wonder if the Fed beige book might have had something to do with the markets finding a little bit of support in afternoon trading. That would be, I feel like, the first time that ever happened. The beige book coming out with some headlines that made it sound like things are a little bit less worrisome than the data would indicate.
Yeah, of course, so we talk about the totality of the data, the dependency on the data here, but of course you put it all together. And I'm not really quite sure you're going to get a completely clear picture. We spoke with Alan Blinder a little bit earlier in the show, and he had that sentiment to share. On this day here, as the markets close, the Dow Jones Industrial Average going to finish the day in the red by about 0.2%. The S&P higher by about 0.1%. The Nasdaq Composite higher by about 0.4%. And the Russell 2000 right here into the close, just squeaking into the green, is going to finish the day higher by about less than 0.1%.
Tweaking. It's tweaking.
Be careful what you say. All right. Meantime, with all the volatility we saw in the equity trade, you still have got a VIX that is just about at 19, down just about a half a point. And Scarlett, if I look at the S&P 500, you've got more names in the green, about 288 names actually squeaking out, tweaking out some gains in today's session, 211 to the downside.
Well, that's what happens when you have the S&P poking into the green in the final hour of trading. You have chip makers building on their advances. They're now up 2.5%. Real estate investment trusts, utilities, or bond proxies, they've been in the green all day. They finished with advances as well. On the downside, autos have been a weak link, off by 2.3%. Energy tracking oil prices lower. And the financial space, down about 1%. There was a downgrade from Dick Bay on Bank of America. A lot of questions over net interest income moving forward.
All right, good stuff. Let's get to some of the specific gainers in today's session. I talked about semiconductors earlier. They are definitely a standout group in today's trade. And you've got AMD, Advanced Micro, up another almost 4% in today's session. It's number 2 gainer in the S&P 500 on semi, was number 1 after getting an upgrade in terms of its price from B of A. So that group certainly a standout, in AMD among them. CrowdStrike, we talked about CrowdStrike, their earnings after the closing bell last night, and that stock certainly continuing to gain in today's session, up as much as 8% in today's trade, and finishing the day remain up about 3%. I know you've got some breaking news.
Yeah, Uber said to be considering spinning off its freight logistics unit. This is an interesting move here. This is crossing the wire right now. Based on people familiar with the situation, we're now learning that Uber is exploring whether to spin off that freight logistics business that had actually been a big contributor over the last few quarters of some of the gains that we have seen, but looking to maybe potentially be a separately publicly traded company. Those shares higher by about 2%, Carol and Mike. And I think this is interesting, too. I referenced this a little bit earlier. We were talking with Karen Snow over the NASDAQ, who sort of is in charge of all these listings that would come to market. We were talking about the dearth of IPOs, but she actually said it's going to be some of these spinoffs that could actually be the big driver here in capital markets later in the year.
Yeah, that would let the CEO, really focus on ride-hailing, food delivery, really kind of create some purity, if you will, in the business. But as you said, investors seem to like it, Romaine. It's up about 1.5% in the aftermarket. All right, let's get back to some of the individual gainers. We'll keep a watch on Uber and look for any more headlines. In the meantime, one more for you. TAP is the ticker, Molson Coors Beverage. It's up about 3% here at the close. Independent research firm Gordon Haskett issuing a note relating to a new risk factor in the Molson Coors February 21 10K concerning the possibility of unsolicited takeover offers. Go back 3 years ago, and we saw this again. I know. What?
Oh, okay. All right. Well,
you don't
that's
like it?
No, it's interesting.
Anything's possible. But
That's
they
a lot
also
to digest, so.
This was also out in another filing, an 8K filing about 3 years ago, and
Yeah,
here it
I
is
mean,
again.
there's,
anything's possible.
Yeah, I
right?
love them. Chicago company, so I'll give them a pass.
All right.
What do you got, Mike?
Oh, on the downside, liquor, Carol and I are on the same page here. Liquor maker Brown-Forman dropped about...
Hey, watch it. Go ahead, Mike.
It's getting near happy hour, Brown-Forman dropping 4.2%. Biggest decline of the year. You might think earnings season was over, but not quite. Earnings per share for the fiscal third quarter trailed the average analyst estimate. But Bloomberg Intelligence saying, though, not so fast, that miss actually masks some core strength. There were a lot of one-time charges, a cash impairment charge charge for the Finlandia brand and a $27 million pension settlement included. Tesla also down 3%. Behringer cut the shares to hold, says they just have less upside potential. The recent price cuts are investment for growth, but do come at the near-term cost of margins. Separately, Tesla under investigation because the steering wheel on some of the Model Y vehicles just keeps falling off. It's apparently missing a bolt.
Yeah, that shouldn't happen.
That's you don't want that happening, Romain. Another one, small cap, United Natural Foods, probably one we don't talk about a lot, but it did tumble a record amount, cut its adjusted earnings per share guidance. BI saying it really underscores supply chain volatility. Romain is still not fixed.
Absolutely. Let's take a quick look at the debt markets here. Of course, an eye on the 2-year yield, still camped out above 5% here, and it inched a little higher here on the day, up about 5 basis points. The 5-year yield was up about 3 basis points, and you had much smaller moves on the longer end of the curve here, but we still remain elevated with the 10-year camped out around 4% and the 20-year above 4% as well. And of course, that brings us back, Scarlett, of course, to Jay Powell, 2 days of testimony, and I'm going to quote Roger Verbal-Kent, the great philosopher there, who basically put it, I think, very succinctly. Poof. And he was gone. That's it, Carol. No more Fed speak. We get Barr tomorrow, I think.
What will we do?
Yeah, Michael Barr's tomorrow. Yeah. And that's it. And he's speaking on crypto for some reason. And that's it, Carol.
Well,
you got a week and a half, and then that's it.
No, it's the data. The data takes center stage.
No.
Exactly.
The data can't speak.
Yes, totality of the data points. This is important. And, Yelena Shaletyeva, I know she was up on TV earlier. She joined us as well.
Got the pronunciation right.
Thank you very much. A former Bloomberg colleague over at BNP Paribas now. But what's interesting is she said watch wage inflation. That's what's really key too, right? Because that's been certainly a problem and problematic when it comes to Fed policy, Scarlett.
Yeah, it has been, although that's been sticky in terms of it's been coming in higher than expected, and people are really questioning what that indicates, especially as the job growth starts moving towards the hospitality and leisure industries where wage gains are a little bit need to play catch up with what we've seen in past years.
And I think it's interesting too. We were just speaking with Diane Jaffe at TCW on the television network here, and she said the same thing, that she was much more focused on the wage growth numbers, particularly the hourly earnings, which last time I looked at economist estimates are expected to kind of resurge a little bit, reaccelerate, excuse me.
Can I point out one headline just for the comedic value of it, Romain?
Sure,
what if we say no? Will he not do it?
Okay, I have a feeling Romain will say yes.
Okay,
WWE, World Wrestling Entertainment,
Yes,
there's a report out saying they're in talks with regulators to allow betting on professional wrestling. Romain, you want to bet on some upcoming wrestling?
Well, this raises a very existential question here.
Is it entertainment
if they know the outcome, if they know the outcome in advance, I feel like there's some sort of antitrust regulatory issue here.
This doesn't
right?
work
because it's not real, right?
It's wait a minute,
it's not.
It's real? Is it real?
Is it real?
I just remember I was a kid, and I remember I used to think wrestling was real, and I remember they were at WrestleMania. I remember when it was John Stossel. I was actually interviewing one of the wrestlers, and he asked him about it being fake, and he slapped him. And he was like, "Does that look fake to you?" And
this like little Romain sitting on the couch watching this.
Oh, yes.
I did, yeah, absolutely.
Always bet on Hulk Hogan, I think.
Yeah, I was Hulk Hogan. Oh my God.
Maybe it'll be prop bets on worldwide wrestling.
Bam Bam Bigelow and Jimmy Superfly Snukem. Yeah,
look at this.
I would bet on that.
You're
Absolutely.
learning a lot.
Absolutely.
Was this pre-bow tie, Romain?
This was pre-bow tie. This was when WWF, we should point out, was actually fun.
That's right.
And then you had the other leagues. Now it's just WWE. They control everything.
Wow, listen to Encyclopedia, Wikipedia.
I think he is going to be betting on WWE. I think that's the answer.
On wrestling.
You got some Brown and Foreman in there. I can take a sip.
No, it's only Wednesday. We only do that on Fridays. We got to wrap. We will see you guys. That's it. Our cross-platform. It was fun. We learned so much. I know so much. I feel so much closer to you, Romain. I feel like I know so much more. All right, Beyond the Bell, our cross-platform coverage, radio, TV, YouTube, Bloomberg Originals. We will see you again, same time, same place tomorrow. All right, as you know, it is International Women's Day, and we thought it made a lot of sense to check out how the Impact Shares YMCA Women's Empowerment ETF was doing. The ETF celebrated its 3-year anniversary, Mike, that happened last August. It's up on average annually nearly 15% over the past 3 years. Top holdings, we're talking about names you know, NVIDIA, Amazon, Apple, Meta, J&J, and more. So let's get to it. With us is Jill O'Donovan, advisor to Impact Shares. She joins us via Zoom from Chicago. Jill, good to have you here with Mike and myself. How are you?
I'm good. Thank you for having me.
Well, tell us a little bit about the investment theory, this ETF, what it specifically can invest in, and it tracks an index, correct?
It does. It does. So the actual gender equity research is done by Equileap out of the Netherlands, and that information is taken and given to Morningstar, who creates the Women's Empowerment Index, and then the fund is developed based on that index. And the work of the YWCA in relation to this is as the impact partner. The YWCA, as many people tend to not know, has been around for over 160 years, empowering women and working to eliminate racism throughout the United States. And because our focus is women's empowerment, we thought this was a great partnership. We provide a lot of the advice about what things do empower women in the workforce, and looking at specifically the Equileap criteria and the way that those specific things really align with the work that we've been doing for all these years.
So what are some of the things that are screened for? I'm assuming representation of women on boards and C-suites, that sort of thing, Jill?
Yes, that's one of the first tiers that we look at. There's 4 broad categories of the 19 criteria, the first being gender balance and leadership in the workforce. Then we also consider equal compensation and work-life balance as a category, policies promoting gender equity, and then a general overall commitment to women's empowerment and the transparency of the company and accountability. So within each of those 4, there are some subsectors. Obviously, women on boards, which is a big topic right now, and as well as women in the C-suite. But we dive a little bit deeper and also look at women in senior management, the overall workforce. We look at the promotion and career development opportunities by comparing the senior management and workforce, and look at what companies are doing in those areas to really be able to advance women throughout their company, not just at the top levels.
Hey, Jill, do you feel like it's transparent in terms of, I mean, some of those are pretty obvious, right? You can look at a board and understand how many women are there, but when you start talking about career development policies and so on, how do you really get a good grasp of what's going on in a company? They can say they're doing one thing, but that doesn't necessarily mean they're doing it.
Right. On a high level, we rely on the research that Equileap is doing. But then when the YWCA gets involved, we have a lot of interactions with some of these companies just based on the fact that they're corporate donors or corporate sponsors, just to individual YWCAs across the country. And so we get to know the folks that work at these companies, and we can help sort of guide them along the way on their journey for these, to better themselves in these different areas.
And they're receptive?
So far, it's been a slow process, and we are a nonprofit, so our resources are fairly limited when it comes to devoting a lot of energy to really engage with the corporations. But we're building on that. One of the things we like to say is we do a lot of work on the ground level, preparing women for the marketplace, and we really see that there's an opportunity to prepare the marketplace for these women. And so we're shifting in that direction to try to really use all levers that are available to us to advance the work that we're doing.
Jill, there's been a bit of a backlash recently from some very far-right politicians about investing notions such as ESG and corporate programs for diversity, equity, and inclusion. I'm wondering if that's on your radar screen at all. Is it a risk for an ETF like this, say if some state's pension fund will be forbidden from investing in this type of vehicle? How are you thinking about that backlash?
Yeah, absolutely. That's a concern. We like to think of ourselves as the true S in ESG. I mean, we are the social experts in these areas. We know what it takes to make these changes, to advance women in the workplace. So we like to distinguish ourselves that way, that it's not just, it's not just sort of a greenwashing or a women washing. This is something that we bring these two worlds together, we can make real change.
It is interesting because I do feel like, Jill, that we kind of are having these conversations over and over again. My team knows because every time we're talking about this subject, I feel like when I kicked off my career a few years ago, many years ago, we were having these conversations about women and equity and gender balances. as you see it, and as you are having the conversations with companies and, working with the folks that are doing research on equity and gender equity, are we making progress?
We are. It's it's slow. We didn't get to this place overnight. We're not going to fix it overnight. It's a long road, and that's why as we've been doing this work for over 160 years, really looking at ways to use all of the resources that are available to us. We see this as a very important impact tool, or a very important platform for us to be able to change the conversation, be in different rooms, really talk to people, get them thinking about, as an employee, what can you be asking of your employer? As a company, what can you be doing differently? As an investor, how can you be directing your funds to, companies that are doing the things you want them to do? And also for just general consumers, making them aware of these things and how they can use their money to actually drive the work that we're trying to do.
Jill, I wonder, is there any potential to be sort of an activist shareholder with this type of fund, voting against firms, proxy, in proxy votes, against policies that you're not happy with at a company? Is there any chance of that?
Absolutely, and that's one of the long-term goals that we have, to be able to be more activist investors. As far as the shareholder proxy issues or the shareholder resolutions are concerned, recently Impact Shares filed a shareholder resolution with Norfolk Southern about paid sick leave, and just, I believe it was last week, and that was based on the holdings that they have in the Women Fund. And I believe last week, Norfolk Southern reported that they had negotiated with 2 unions, and this was in direct response to the shareholder proposal that Impact Shares had filed.
Hey, Jill, I'm just gonna push a little bit, but your ETF, the Women's Empowerment ETF, if I look at some of the top holdings, NVIDIA, Amazon, Apple, Exxon, United Health, Meta, J&J, Procter & Gamble, Comcast, all of them have men CEOs. So I understand what you're saying in terms of progress, but I just feel like, what is the conversation you're hearing about why we're not seeing more female CEOs?
That's a very good question. There was a time when the reason was, well, there just aren't any, or they're just not quality candidates. I think that conversation has changed. I think it's one of those things that will just take time, and to be able to, have it's one of the reasons, in fact, that we look at sort of this overall promotion and career development track, so that we have that sort of that pool to be creating and pulling from. It is slow. It's very slow progress. And, with respect to the companies that are in the index, I know that there's, people can come up with issues for each of the different companies that, don't tick different boxes. And we would love to see a time where each of the holdings actually, they're getting A grades across the board from Equity on these different categories. Equity just released their most recent report, and it looks like even the best companies are still in the C+ category. So it's going to take more time, but I think we're encouraged. We see a shift in at least the last 5 years. Well, I think it's been a lot bigger.
That's a good thing. I'm going to have to leave it on that note. Jill, thank you so much. Jill O'Donovan, advisor of Impact Shares, joining us via Zoom from Chicago. This is Bloomberg Radio.
stocks, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:21 on Wall Street. We do check markets all day long here on Bloomberg. We begin with a developing story tonight. Sources tell Bloomberg Uber Technologies is exploring whether to spin off its Uber freight logistics arm in a sale, or perhaps as a separate publicly traded company to streamline its focus on ride-hailing and food delivery. Uber shares, they're moving after ours. Right now, we've got Uber stock up by just about 2.1%. I'm also keeping an eye on MongoDB. That stock lower and extended trading after the infrastructure software company gave a full-year revenue forecast that was weaker than expected. It did also report fourth-quarter results that were ahead of the analyst consensus, but after ours, we've got shares of MongoDB down by roughly 5%. Wall Street did not get much relief today from Jay Powell's testimony to lawmakers, especially after another round of jobs numbers came in on the hot side, bolstering bets that the Fed will have no alternative but remain hawkish in the months to come. Choppy session, equities were whipsawed in the end. The S&P ended the day with a gain of 5 points, up by about 0.1%. The Dow down 58, down 0.2. NASDAQ up 45, a gain there of 0.4%. 10-year yield 3.9%, 3.98% on the 10-year. The 2-year highest since 2005. The yield there 5.06%. Spot gold little change now, up 53 cents, 18.13 the ounce. And West Texas Intermediate crude down 1.4%, 76.53 a barrel. Recapping S&P up 0.1. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, got it, Charlie. Thank you so much. Carol Master along with Mike Regan live in our Bloomberg Interactive Broker studio here on Bloomberg Business Week, which is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. See if your business is eligible for employee retention credit assistance with the team at Innovation Refunds. They help make the process easier and less stressful so you can focus on your business. Learn more at getrefunds.com. So, Mike, no doubt about it, everybody's talking about it, jumping in. Just yesterday, Salesforce's VC arm launched a $250 million fund, its largest to date, to invest in generative artificial intelligence startups. Bloomberg talked with Ken Griffin of Citadel. We talked about this too, how they are negotiating an enterprise-wide license to use OpenAI's ChatGPT tool. I mean, everybody, it's everywhere.
It's amazing. And I mean, you know what, there's been hype around AI for years, but it's just really reached this crescendo. You know, it kind of reminds me of when companies would just started adding blockchain to the name of their company to get a
.com,
a
way
boost
back
for
when.
soccer, .com. So it's, you know, it's hard not to imagine that maybe people get a little carried away with this.
All right, so we want to talk about this. We want to talk about VC more broadly. We've got a perfect guest, Alison Baumgate. She's general partner at Semper Virens, where she invests in technology transforming companies in work health and financial wellness. She is with us via Zoom in San Francisco. She's got a book out, Breaking Into Venture. An outsider turned venture capitalist shares how to take risks, create power, and build life-changing wealth. Alison, welcome. Nice to have you here with us. First of all, if we could start broadly, what is the environment today for investing in startups? Is it a good one?
Today is actually the best time in recent history to invest in startups. The venture capital industry has gone through a lot of changes over the last several decades, but the best businesses tend to be built in recessions. And not that we're technically in a recession, but when you see a pullback, and it's a lot easier to determine which companies are actually building real value as opposed to just increasing their valuation because there are a lot of investors around the table. And these are the times when it's easier to find that signal from the noise.
You know, Alison, it seems like a year or two ago there was so much buzz towards crypto and Web3 in the VC space. How's the vibe there for that now? Is it, you know, is that all sort of gone away? Is there any funding being done for crypto and Web3 businesses these days?
It's definitely cooled off significantly. And we've seen a lot of the excitement and the hype cycle around crypto and Web3 now move toward AI and generative AI, per your point earlier. But what I think what's really important for investors and entrepreneurs to understand, and is the reason why I wrote this book, is that venture capital is an industry that has hype cycle after hype cycle. And that is inevitable. And so being able to understand how to navigate some of that excitement and put it in context for yourself when you're deciding whether to take a job at a technology company, whether to invest in a technology company, whether to start one, you have to be able to sift through that and understand how the industry works if you're going to figure out what to actually pay attention to.
Let's go there. You said, to figure out what's hype and what's not. What is hype in this environment? What's not? AI, not hype.
I think everybody in venture agrees that AI is incredibly exciting. As you said, it's been around for a long time, but we've clearly crossed a threshold very recently where it can start to have some more exciting commercial applications. But again, the mission of this book is to try to open up the venture capital industry, make it apparent how it operates, what incentives are at stake, so that we can bring more types of people around the table. We're at a moment in time right now with AI where the business model behind some of its applications is going to determine who it affects, how it affects them, how it grows and changes over time. And it's going to be affecting us for generations. And we need more types of perspectives, more types of people around the table talking about what business model makes the most sense, because it is the venture investors behind some of these companies that determine what the business models are. And that has implications for society more broadly. So I think it's important that society is reflected in venture capital funds as well.
Are you saying to be fair, right? AI's been out there for a while, but we're taking it to another level. Is it fair to say that we really don't know exactly how it's going to impact this, and we're all kind of in this giant lab right now?
Absolutely. It's that's the exciting thing about disruption, is you just don't know exactly where it's going to go, but that's where the diversity of perspectives is really critical.
And Allison, the other obvious buzzworthy thing in VC was medical healthcare type of spaces after the pandemic. Is that where does that stand now? Is there still a lot of buzz or hype around startups dealing with sort of COVID or the next virus that we have to worry about type of situation?
We invest in digital healthcare, and COVID created a variety of catalysts for adoption of new technology in the space. When we evaluate a business, we look at 5 T's in our diligence process. We look at technology, team, terms, TAM, and most importantly, timing. And there are a lot of great ideas that just have the wrong timing, but COVID, I think, unlocked a lot of reimbursement models, made it possible to do virtual care, which has changed a lot of the landscape around healthcare. So I think we're still really excited about how that has disrupted the industry for the better. But there are a lot of businesses that that thought they had product market fit, but they actually had COVID market fit. And I think some of those are getting sorted out from the group now. That makes sense.
It's interesting. I'm thinking if folks are listening to you, right? And there's a lot of folks who come out with MBAs and they don't necessarily go to Wall Street anymore. If they do, it's kind of a touch and go, and then they go out to the venture capital world, right? And I, certainly think about your own experience, right? You were at Goldman, and here you are. But what I'm wondering is, when you think about companies who are buying, maybe it's older line companies, like I'm thinking about a Weight Watchers, right? That bought a telehealth provider yesterday. We saw the stock soar on the news. Like, what is your advice to folks who are looking at kind of trying to figure out where to go? Is this an old line company, but they're doing some cool things that are innovative? So what's your advice on that?
That's a lot of what we cover in the book. And of course, on its cover, it's geared toward anyone that wants to break into venture capital. But the concepts actually apply to any kind of career and figuring out where you want to place your bets, right? If you take a job at a company, you're actually investing your time and your reputation with that company as well. So it is very similar to the venture model in that way. And a lot of what I encourage individuals to do, whether you're an entrepreneur, a professional, or a venture capitalist, is to do your homework and understand what exactly you're joining, what that looks like, and then what it means for you in the future. Does it open up more possibilities, or will it shut off possibilities for you? So my advice is to surround yourself with people that can help you figure out what makes most sense and what's going on behind the curtain, because everybody knows how to tell a great story, but what really matters is who's pulling the strings and what kind of power they have and what that means for you.
Allison, obviously the markets this year have been so laser focused on these surging interest rates. I'm wondering, does that have a chilling effect on early stage VC or not? Is it there's just so much dry powder that it doesn't really matter?
Absolutely, it has an impact. We're investing in growth businesses, right? And the cost of capital is a really big factor in how quickly companies can grow and how they're valued. And I think the current environment, the compression in multiples in the public markets is going to have the biggest impact on later stage companies that have raised a lot of capital already and have raised at valuations that were based on assumed revenue rates that they hadn't yet reached. And now the environment is different. And so that has a waterfall effect. But when it comes to investing at the very early stages and you're investing in new companies that haven't raised a lot of capital, that haven't made those promises to their investors yet, now is an incredible time to do that because they have a clean slate and they don't have that baggage dragging them back. So it actually creates an opportunity for new businesses to disrupt incumbents in a way that might have been harder when capital was a moat.
All right. Well, great to check in with you. Allison Baumgate, she is general partner at Semper Virens, joining us via Zoom from San Francisco. A headline crossing the Bloomberg Silvergate. You know, that cryptotide bank that has certainly had its share of troubles. The headline is it's going to wind down its operations and liquidate, its Silvergate the stock bank it is, So let me repeat that again. Silvergate Capital to wind down its operations and liquidate Silvergate Bank. We have the stock, Silvergate Capital, down about 8% in the post-market. So we'll continue to track it. It's a few more headlines, if you will, crossing on that. All right, you are listening and watching Bloomberg Business Week. Let's get a check on world and national news. Off to Nancy Lyons. She's in D.C. Hey, Nance.
Thanks, Carol. President Biden's budget, that will be the focus of his speech tomorrow, will kick off a fight over spending in Washington, and House Republicans are already making plans in case the country goes into default. Bloomberg's Nathan Hager has more.
The House Ways and Means Committee says it will take up a bill that would prioritize some federal payments over others and keep checks going to seniors on Social Security if Republicans can't reach a deal with Democrats on the debt ceiling. The Washington Post reports House Republicans tried to pass a bill like this in 2015, but it never got a vote in the Senate. Democrats warned at the time that the legislation could eliminate funds for national security programs and the poor just because the country couldn't afford to pay for them. In Washington, I'm Nathan Hager, Bloomberg Radio.
The annual assessment of global threats facing the U.S. is out, and the Director of National Intelligence, Avril Haines, says China remains a significant concern.
The People's Republic of China, which is increasingly challenging the United States economically, technologically, politically, and militarily around the world, remains our unparalleled priority.
Haines testified today before the Senate Intelligence Committee. She says China has resisted U.S. efforts to make it comply with Western sanctions against Russia, deepening its alliance with Moscow. She also offered new warnings about Chinese and Russian space warfare capabilities aimed at attacking U.S. satellites. President Biden is marking International Women's Day today by calling out a number of countries for suppressing women's rights. In a statement, Biden said while women have made progress over the decades, they're still under attack in countries like Afghanistan and Iran. He noted the Taliban now bars women and girls from attending school and working. Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. This is Bloomberg.
Facts, headlines, and breaking news 24 hours a day at Bloomberg.com, on Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 4:41 on Wall Street. We check the markets all day long here at Bloomberg. I'm Charlie Pellet. Lots going on after the closing bell. We begin with Silvergate Capital. That is the crypto-friendly bank. That stock absolutely cratering right now. The stock is down 43%. Silvergate says it intends to wind down operations and voluntarily liquidate the bank in an orderly manner and in accordance with applicable regulatory processes. Again, a story we're following. Silvergate plunging after hours, down now by about 44%. Uber said to be exploring whether to spin off its Uber Freight logistics arm in a sale or as a separate publicly traded company to streamline its focus on ride-hailing and food delivery, this according to sources. Wall Street didn't get a lot of relief from Jay Powell's testimony to lawmakers today, especially after another round of jobs numbers came in on the hot side, bolstering bets that the Fed will have no alternative but to remain hawkish in months to come. We've got the 2-year, the highest since 2005, 5.06% now on the 2-year, 10-year yield 3.98%. S&P 5-point gain, choppy session up 0.1%. The Dow was down 0.2%. Sonia Meskin is head of U.S. macro at BNY Mellon Investment Management.
You know, I do think that there is certainly some optimism regarding the equity market. I think that investors are now pricing in, to some extent, a more hawkish Fed. But on the other hand, the U.S. economic resilience indicates that we might be able to withstand that.
Recapping, stocks finished mixed with the S&P up 5, up 0.1. And that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Just a reminder, Silvergate Capital down about 36% in the aftermarket, planning to wind down operations and voluntarily liquidate the bank in an orderly manner and in accordance with applicable regulatory processes. So they just did a regulatory filing. So just wanted to bring that out to you again. All right, this next story, Mike, definitely timely. It's among our most read on the Bloomberg. It's also today's Bloomberg Big Take. It's about how the number of high containment labs around the world conducting potentially risky scientific research, it is surging despite a lack of global agreement on how to make sure they're safe. Feeling good about that?
Well,
that's what I call a wait what moment.
I love a story where I feel educated after reading it, and I've got a lot
You're not
of new,
running for the hills?
A lot of new jargon to throw around. BSL-4. Do you know what a BSL-4 is?
You're so cool. I do, because I read this. You know who really knows what they are?
I do.
All right, let's get to our Bloomberg News U.S. healthcare reporter Riley Griffin. She's here in our Bloomberg Interactive Broker studio. So what is that kind of lab?
What is a BSL-4 lab? I want you to picture
so cool.
moon suits. A BSL-4 lab, it's a biosafety level 4. It is the maximum security designation for biological research in the laboratory setting. And what it does, it's the space where you work on pathogens that have potentially no treatment or vaccine and are lethal. So think anthrax.
Yeah. Does the Wuhan lab that everyone's talking about qualify in this category?
So the Wuhan Institute of Virology is a BSL 4, 3, and 2. So they've got multiple labs. It's a big compound. It's known for being a hub of the world's best coronavirus research. But really what we're bringing into play is that the ongoing debate about the COVID-19 pandemic and its origins, it's unresolved. There's no smoking gun. There's no conclusive evidence.
Is it ever going to be resolved, do you think?
What I think doesn't matter in this case because the debate keeps going. Just today, there was a congressional hearing in which lawmakers continue to probe this very question, but it's the debate itself that is causing a lot of friction among the scientific community and making it difficult to address this underlying issue that more of these labs are proliferating around the world and there's less ability for oversight and regulation.
All right, so Riley, break it down for us. How many more are there? Where are they specifically around the world?
Yeah, so as of right now, there are 69 BSL-4, those maximum containment facilities around the world. About a decade ago, there were just 25.
Big difference.
Wow. Big difference. And what we've seen throughout time is people have actually been raising a red flag and warning about this for decades. With every big health crisis, take the anthrax attacks, H1N1, H5N1, SARS and MERS, there's been these
building booms where countries want to construct in the name of pandemic preparedness in order to understand these pathogens, these deadly pathogens. Public health officials suggest that you need to actually be able to work with them in the lab setting. So there are these building booms, and we're seeing that take place right now, but there's never been an international entity that oversees them all.
Well, I think that's the most important takeaway from the story is what is the global regime to police these, the standards? There's none.
There's none. I mean, literally, there is not even an entity that is tasked with knowing how many there are. The only reason we know that data is because there are two academics, King's College London and George Mason, that collect this data by hand and enter it into a database. So it's not like we have good visibility globally, let alone domestically in the US, into where these labs stand. And the problem, I want to be clear, isn't the labs themselves. Nobody is saying that safeguards shouldn't exist in place. You shouldn't have those moon suits with the umbilical cord to air. Those are intended to help protect the scientists working with them, but there's no uniformity in terms of the safety and security that is taking place in these labs.
So wait a minute. Even in the U.S., we're not sure we know where every one of these is. Like Carol could have one in her basement, and no one knows.
Just get Christmas decorations in my basement.
So that is a phenomenal question. What we do have is something called the Federal Select Agents Program. So there's a small list of pathogens that the U.S. actually tracks who has them. They're not tracking it by the BSL, that biosafety level designation. When it comes to the most deadly pathogens, we actually tend to know where they are. It's BSL 3s, one level below, where you're working with, sometimes even COVID, that we don't have much visibility to. If you're not working with one of those pathogens, we don't know where it is.
Okay. Let's just put aside having some kind of global specific oversight body. Yeah. What about individual countries? What are they doing in terms of oversight?
So here in the US, there's a federal advisory group that is actually trying to ramp up some scrutiny of enhancing pathogens to make them more deadly or more transmissible. Abroad, it looks different case by case. There's only one country in the world that has policies around dual-use research, which is the kind of research that we can reasonably anticipate does good, but also potentially harm.
Our friends to the north?
Canada. There you go. Hey, good job.
I read your story.
So only Canada has that in place. There are various networks, including the WHO, the World Health Organization, that help provide guidance, but nobody lays down the law. There are no penalties for lab accidents.
Do scientists and researchers want global oversight, or are they worried about the restrictions as a result of that?
It's a debate. It's quite tense. A lot of scientists don't want to necessarily lose autonomy that they have in the laboratory setting. So many have suggested, for example, the U.S. Push to put more scrutiny in place, that it goes too far, that it's going to slow down the kind of innovation that led to the COVID vaccine, for example. Are those checks and balances going to actually make it more difficult to respond to public health crises quickly? That's the question they ask. But the reality is, for decades, scientists have been coming together to bring up these issues, and the concern, again, is that the COVID lab leak theory and the ensuing debate has really fueled geopolitical tension around this subject, to the very point that Russia has announced 15 of these labs may be built by the end of this year. There's no sense that that's actually materializing. The U.S. suggests it's disinformation, but you can just see that posturing shows how tense this conversation actually is.
Riley, when that theory that it leaked from the lab first started making the rounds, there was a lot of pushback from the research community. Now the government really seems to be warming up to this theory. The FBI director said he thinks it's probably the case. The Energy Department recently came out and said it's their leading theory. Where does the research community stand? Do they have a good case against this, or are they sort of like, leave us alone, we didn't do it type of thing?
And Riley, just got about 20 seconds.
Yeah, I think the scientific community still, for the most part, stands with the zoonotic hypothesis, this idea that it jumped from animals to humans. But we don't know what intelligence community knows, and lawmakers are really pushing for them to make public that classified information. This debate isn't going away anytime soon, so I would imagine we might end up in this room talking about this again
The point
together.
is, let's get beyond that. Let's look at the labs that exist around the world and figure out some oversight. You are a rock star. I know we're not supposed to use it based on the Super Bowl commercial, but you are. Riley Griffin of Bloomberg News.
company news headlines on Bloomberg Radio.
From Bloomberg World Headquarters, I'm Charlie Pellet. 4:53 on Wall Street. Developing story, one that we're following after hours. We're keeping an eye on Silvergate Capital. That stock plunging after hours, down now by 30%, have been down roughly 50%, but Silvergate making news. It plans to wind down operations and liquidate its bank after the crypto industry's meltdown sapped the company's financial strength. Sources tell Bloomberg Uber Technologies is exploring whether to spin off its Uber Freight logistics arm in a sale or as a separate publicly traded company to streamline its focus on ride-hailing and food delivery. Tesla is under investigation by regulators over complaints the steering wheel can fall off of certain new Model Y vehicles when they're in use. And more on that story right now. Here's Bloomberg's John Tucker.
Charlie, the National Highway Traffic Safety Administration said it's aware of 2 incidents in which the wheel detached from the steering column of 2023 Model Ys while being driven. The evaluation opened March 4th. It applies to an estimated 120,000 vehicles, was according to a filing posted on the NHTSA's website. The affected vehicles were delivered to owners without the retaining bolt that holds the steering wheel in place, according to the agency. Charlie?
And that's John Tucker reporting Tesla shares down today by 3%. Apple said to be reshuffling management of its international business to put a bigger focus on India. That's seen as a sign of the nation's growing importance. And those are some of the company stories we're following at this hour. I'm Charlie Pellet, and this is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenevec on Bloomberg Radio.
All right, everybody, you are listening and watching Bloomberg Business Week. Carol Masters, you know Tim is off. Mike Regan with us. We'll have more Business Week in just a moment. First up, though, let's head back to Nancy Lyons. She's in our 99.1 newsroom in Washington, D.C. with a check on world and national news. Hey, Nance.
Thanks, Carol. While the U.S. Justice Department is taking steps to improve policing in Louisville, Kentucky, this after an investigation found a pattern of officers violating the rights of citizens. The probe was prompted by the fatal police shooting of Breonna Taylor in her own apartment. U.S. Attorney General Merrick Garland says it's heartbreaking to see how officers have been treating residents.
Some have videotaped themselves throwing drinks at pedestrians from their cars, insulted people with disabilities, and called black people monkeys, animal, and boy. This conduct is unacceptable.
Garland says the city of Louisville has signed an agreement to work with the Department of Justice to address the problems that have been uncovered. The city has already settled a number of lawsuits related to Breonna Taylor's death, including a $12 million payment to Taylor's family that ended a wrongful death lawsuit. Lawmakers in the House are looking at the origins of the COVID-19 pandemic, with the majority of Republicans on a special subcommittee convinced it began in a Chinese lab. Bloomberg's Irv Chapman has more on today's testimony.
The director of the Centers for Disease Control in the Trump administration, Dr. Robert Redfield, said of the Wuhan laboratory,
I think it probably caused the greatest pandemic our world has seen.
And as to the origin of COVID in a marketplace for live animals,
as a clinical virologist, I felt it was not scientifically plausible that this virus went from a bat to humans and became one of the most infectious viruses that we have for humans.
Committee Democrats said both potential origins are plausible, and the Republicans were on a political mission to discredit Dr. Fauci and his colleagues. In Washington, Irv Chapman, Bloomberg Radio.
Global news 24 hours a day, powered by more than 2,700 journalists and analysts in over 120 countries. I'm Nancy Lyons. Now back to you, Carol and Mike.
All right, thank you so much, Nancy Lyons. Well, Bloomberg Business Week is brought to you by Innovation Refunds. This is your daily reminder from Innovation Refunds. They may be able to help your small to medium-sized business qualify for ERC assistance. What's the ERC? Well, it's a tax credit for the sacrifices business made for keeping employees on payroll during the pandemic. So let Innovation Refunds help you grow your business. They don't get paid unless your business receives its refund. Learn more at getrefunds.com. Well, today, you know, is International Women's Day, and as you also know, March is Women's History Month. So every day this month, we've been celebrating significant moments in women's history. Now, with your installment for this Wednesday, March 8th, International Women's Day, here's Bloomberg's Lisa Mateo.
On this day in women's history in 2017, the Fearless Girl sculpture made her debut across from the Charging Bull statue on Wall Street. It was later moved across from the New York Stock Exchange building on Broad Street. The 4-foot-high bronze sculpture of a young girl standing confidently with her hands on her hips represents female empowerment. It was created by artist Kristen Vispel and was meant to send a message about workplace gender diversity. Fearless Girl was commissioned by State Street Global Advisors to advertise for an index fund that invests in companies that have a relatively high percentage of women in senior leadership positions.